Hi, I'm Peter Rose, founder of Longwood Currency Trading. Forex trading while walking the dog. Yep, that's... How do you do that? Why would you do something like that? When you have a clear plan of what you want to do, and you have a picture in front of you, the chart, that says it's highly likely from a probabilistic standpoint. Likely is a gambling thing, probabilistically is a mathematical term, that you have a probabilistic opportunity to bring into reality what the picture in your mind looks like. When you have experience, you don't do this when you're a beginner, but you have to start building to that level. Otherwise, where are you going to get the confidence to make the trades? Should you put a trade on with the limit orders and then go walk the dog? No, not until you have some confidence. I don't want to trade in fear. I want to enjoy myself, and I want to be careful with risk management. But the overriding thing that I have going for me with the experience that I have is I know what my average win-to-loss ratio is. How many times do I win a position as opposed to how many times that I lose? Now that gets thrown off a little bit because the calculations become hard when you're trading a large account. I have a six-figure account, and so I may go all in with 5 lots and come all out with 5 lots. But then again, I may go in with 3 lots and add 3 and add 1, or I may go in with 8 and add 3. And though your win-to-loss ratio is critical in your early stages of development, so that you can determine in an all-in, all-out basis. In other words, you go in with your 3 lots or your 3 minis or whatever it is, and you come out with 3 lots. You go in with 5, you come out with 5. Once you get to the point where you're trading 8 full lots, and I'm not talking about 200 or 500 to 1 leverage. You have to be doing this stuff with reasonable leverage. If you try to do the stuff that I'm talking about and you're over leveraged, it ain't going to work for you. But then nothing that you're going to do is going to work for you when you're over leveraged. Remember, the guys that are showing you this may have a $300,000 account, but they may only be trading 30,000 of that at 500 to 1. And they'll blow out of that a couple of times before they finally hit it and they make some money. So at 500 to 1 on a $30,000 account, you do the math, you do 20 pips, and you make how much ever money that is, and that makes up for the ones that you lose, and that's the one that you broadcast. Look, I made $20,000 this week. What are you going to do trading your single full lot position, or maybe you have 2 lots, or maybe you're up there trading 5 full lots? If you're following my recommendations, you're doing it at 10 to 1. So if I have $10,000, I'm trading 1 full lot, not 1.5, not 2. I'm not. Because there's other things that I want to do with that leverage once my position goes into profit. And if you don't understand that, then you're not going to be able to capitalize on the runners. A runner is a price that goes beyond your profit target. I've talked quite a bit about runners and how you manage runners and deal with them in previous videos. I've got over 420 videos right now, so you might want to go back into that catalog and check that out. But the win-to-loss ratio is important to establish when you're an all-in, all-out trader, because it gives you an idea of the decision process that you're making. If you are a 60-40 trader or a 70-30 trader, or maybe you're upside down 30-70, whatever it is, once you establish whatever percentage trader that you are, going all in and all out, it gives you an idea of the success of your entry analysis. Now, if you mess up the position management and you mess up the exit methodology, that becomes problematic. But those issues only come into play later when you're building positions, when you're trading 8 lots or higher. You know, I had I opened a trade this morning when I got up. Turned the computer on, brushed my teeth while that was warming up, went in, looked at the situation. There might be something going on here. I went in and got some breakfast and got ready to go because I had to take the bow dog out for a walk this morning. And so I went back in to look at the trading platform. Oh my goodness, that looks like that picture I have of an optimum setup. I went through my entry analysis, the 4 conditions of entry analysis. I put an order in on a limit order. I put another one in and a third one in. So I have 3 limit orders in there. I went off to walk the dog because my win-to-loss ratio tells me that if I'm wrong, I might trigger that first limit order, and if it goes against me, well, I know what my damage is going to be in the half hour or so that it takes me to get back from walking the dog, and I don't feel that that's going to happen, but if it does, I'm willing to absorb that, and I don't think it's going to go that far, and I've got my panic stop up anyway, so it doesn't matter. Even though I'm breaking that position up into several transactions, I'm still using the confidence that I have from my win-to-loss ratio. That tells me how good of a trader I am. When I'm trading all in, all out, I've got a 70-30 win-to-loss ratio. 70 trades out of 100, I'm going to win, 30 I'm going to lose. And that's all in, all out. Once I go to building and staging into positions with larger lot size, 8 lots and up, my win-to-loss ratio will drop. The win value is probably about 63%. Well, why does it drop from 70 to 63%? Because when you're staging and building into a position, if I have a 10-lot capability, I may go in with 5 lots and add 3, or I may go in with 3 and add 3 and then add 1 and dribble into it. So I put that initial 3 lots on, and it goes and it doesn't do what I think that it should do. I go out. Well, that's a loss. I put it back on. Maybe when conditions change, it still doesn't do it. I take it off. It's a loss. So maybe I'm losing 5 pips or 10 pips each time. So I've lost $500. So now I go in on maybe the 3rd time. That one takes. I add to it. Now I've got 8 lots or 6 lots or something like that. And I add to that. Maybe I get 10. Maybe if the thing is ripping along, I'll have 15, 20 lots by the time the position starts to weaken and I get out. And it's only when you stage and build into positions that you really have a position to manage and you have an issue with exit methodology. When you're an all-in, all-out trader, you don't stage those in. You go in with 5 lots, and when you hit your profit target, you come out. You buy a ticket on the train. You don't care where the train's going. You buy a ticket to go to this particular place. You get off the train. It doesn't matter how far that train's going to go. You bought the ticket to get there. That's the whole point of all-in, all-out trading, is you don't have any decisions to make. That's why it should be simple. So whatever that win-to-loss ratio is, well, as I've said, gives me an indication of my ability to have correct entry analysis. Once that trade is on, I got nothing to do except trail a stop and go out when the profit target is hit. I don't have any position to manage, and I don't have any exit methodology. I get out. It's really simple. I mean, if you can't make any money as an all-in, all-out trader, but that's how you develop these metrics so you determine how good of a trader you are. If you don't know how good of a trader you are, your decision process, then you certainly can't go into building a position and trading large lot sizes so that you're staging in. You wouldn't know what to do because you have no confidence in yourself. So because I have a good win-to-loss ratio when I'm all in, all out, which would be if that initial limit order that I put on there failed and got stopped out, well, that's okay. I know what the probability is for that happening. I also know what the probability is for it not happening and for going through and hitting that next limit order. That gives me the confidence to put the trade on and take the bow dog for a walk in the woods. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.